Can you hear me now? Can you hear me? Anybody?
Yep, we can hear you.
Ah, very good. Very good. That's the first time we've had a glitch on this computer in quite a while. Hey, good morning, Brooke. Always nice to see a smiling face as my audience here. All right. We'll wait another moment here, get everybody up. Looks like we have the Magnificent Seven here. That's excellent. That's a good turnout. So I was checking the schedule, and I was starting to say before, we're not as far ahead as I thought we are. So we're going to plow through chapter 4 today, and then we'll do 5 and 6. We'll do 5 on Wednesday, and I guess Friday to do chapter 6. And that will give us a full class just to review for the test. And we can do that as long as you like on Monday. It looks like the test is scheduled for June 2nd for chapters 1 through 3, and then June 4th for chapters 4 through 6. So hopefully you've picked up the debits and credits a little bit. I know it's a bit of a struggle, and you're going to be fighting it a little bit. But believe me, it's worth the effort to understand very clearly what items have a normal balance of debit or a credit. So without any more babbling, let me share a screen. Oh, great. I got to call the screen up. Jesus. Sorry. Just give me a moment here. Chapter 4. We're waiting. Come on, come on. Okay. Can somebody verify that they see the slides, please?
Yes.
Okay, very good. Thank you, Lee. All right, here we go. We started off with this class with a little intro, types of businesses, types of industries, just a little introduction to get you going. And then in chapter 2, we introduced transactions, and we showed you how to maneuver the accounting equation using words like increase, decrease, cash goes up, cash goes down. And then chapter 3, you were introduced to the general ledger in the form of a T account. And we learned that with the knowledge of debits and credits, we can post to a T account, and we can foot a T account, add it up, and come up with the balance of the T account. And hopefully we learn how to put together a simple set of financial statements using the trial balance. Now, chapter 4 is about journal entries, journalizing and posting transactions. Those numbers that you saw on the T accounts in chapter 3, they have to come from somewhere. And where they're going to come from is you sitting at your computer system, and you decide that this is the proper journal entry, and you put it into your system. And then maybe you do a couple more entries depending on how busy you are. At that point, you're going to check your journal entries. If you're satisfied with them, you will hit the button called post. And once you hit that button called post, it goes right into the general ledger. So what we're doing in chapter 4 is learning how what the mechanism is for getting the numbers into your general ledger. Okay. So let's see what we have here. We have page 1, huh? Flow of data. Yeah, let's take a brief look at this. Flow of data. Typically, we talked a little bit about this. You analyze what happens what happened? We got the electric bill. We know what happened. We're paying the payroll. That's another thing. What happened? And you enter the transactions into the general ledger via journal entries. And then from there, you post them to the general ledger and you're able to run your trial balance after that, okay? So we analyze, we enter, we post, and then we run the trial balance in order to prepare the financial statements at month end. Source documents. What's a source document? It's just a piece of paper, right? It's an invoice. It's a sales receipt. It's a cash register tape. It could be the copy of an email or a copy of a text or something like that. You know, they talk about a paperless office. That'll never happen. And there will always be papers to be considered, processed. So almost any document that provides information is a source document. And it's a trigger. A source document. We go back to my favorite example. The electric bill came in the mail. That's a source document, the electric bill. And the electric bill is $1,000, and that seems reasonable. So that triggered the analysis. We begin the process of entering that, and that electric bill is our evidence for that transactions. If the auditors come in and say, where'd you get this $1,000 for electric? Show them the bill, huh? And you typically staple or file away these things with the journal entry, or maybe you take pictures of them and put them online now. Perhaps that's a better way to do it. Examples, check stubs, like I said, receipts, cash register tapes, sales tickets, invoices, things like that. Source documents usually get you started, huh? Describe the chart of accounts as a means of classifying financial information. The chart of accounts, that's your list of all the accounts used by a business. Think of these as a folder. You're going to have a folder for cash, and that folder takes the form of the T account. You got a folder for accounts receivable, inventory, accounts payable, all your various expenses. That's the chart of accounts. Now, the chart of accounts is laid out in a specific order without exception by every company in the world. They start with the assets, then liabilities, then equity, then revenues, followed by expenses. So let's see what they have here for us. And this is pretty typical here. This is exactly how I always saw it in the working world. Your assets typically will be given an account number of 1, starting with a 1, okay? And these are very simple looking account numbers. They're only 3 digits long. When I worked for a small division of a large company, our account numbers were like 14 numbers long, because the first number was the account, then it might be the bank, then it might be the location, what company, what subsidiary. But starting with 1 is very typical for assets, 2 for liabilities, 3 for equity, and like I said, 4 for revenues and expenses. And everything after drawing, here is your income statement right here. The income statement has only revenues and expenses. Everything else belongs on the balance sheet. So let's do some journal entries. Okay, the journal is a day-to-day listing of the transactions, and they provide a record. You can call them the book of original entry. And it's typically a 2-column number system, 1 for debits, 1 for credits, and any kind of transaction may be entered into what this book is calling a general journal. Since we're just starting off with accounting, we're going to assume that everything we do is done with a journal entry. And the act of entering the transaction, it's called journalizing. This must be journalized. And we're going to have a date, title, amounts, and a brief description. Oh, good. We're back to Mitchell again with his transactions. Fortunately, I don't think we have to go through all his transactions for the 3rd time, okay? But anyway, Mitchell opened a bank account with a deposit of $5 large for his business, right? Transactions now have dates associated with them. That's the first time they're throwing a date on here. Now we know he began his business on June 1st. Take a look at the journal entry grid here. This is your blank journal entry. When you go into your system, whether it's Oracle or Mass 90 or something from IBM or QuickBooks, most likely, this is what you're going to see on your computer screen. And you're going to be sitting there and you're going to put in the date, you're going to put in the debit and credit and the dollars. As far as the year goes, you just put that on the top of the page and not worry about that. That, by the way, that question has come up on the last 3 tests, true or false. You put the year down with every entry. No, you only put the year on top. So maybe I just gave away a 1.5 points to everybody. So you start off with your debit, cash, and we put it under the debit column, dollars. And then we do Mitchell Capital, which is the credit. So take a look, please. You have a debit to cash, $5,000, and then a credit to Mitchell Capital for $5,000. That is our journal entry. That is our journal entry. And if we're happy with it and feel it's okay, we would then post and move it into the general ledger. Please take a look at where it says Mitchell Williams Capital. Notice the indentation. That's very, very important. All credits under the description column must be indented. It's the convention. It's what people expect to see. It's what your auditors look for. It makes things a lot easier when you're trying to run your eyes down a column of numbers, okay? So there's your general journal, and typically you'd have a little explanation with it. Little explanation. And that explanation should be very, very short and concise and to the point. The explanation of the entries entered on the next line, and it looks like you're indenting it more. I don't care about indenting that so much. But all of your explanations can begin with the words "to record." And the explanation here would be "to record owner investment." That would have been fine. The explanation is absolutely crucially important, because a year from now, you're not going to remember this journal entry, perhaps. The auditors are all over your place. They're swarming all over you guys like an army. And someone says, what about this entry you wrote last January 3rd? Well, you're not going to remember necessarily until you pull up the entry and read the explanation. So the explanation obviously provides a trail back to what our original intent was. But there's a second reason why the explanation is so important. As you get into more complicated areas, you're preparing a journal entry. If you can't come up with a real brief 10-word at the most explanation that makes very clear what you're doing, there's a possibility your journal entry is wrong. So if you're struggling to describe what you're trying to do, that's a sign there could be a problem. Okay, so the explanation has a whole bunch of purposes. What's a compound entry? It just means more than one debit or more than one credit. Every journal entry has to have one debit and one credit, right? Every journal entry consists of at least one debit and one credit. You can have a ton of debits and only one credit, or you can have 100 credits and a debit. And here's something else I didn't mention. I just realized all debits come before any credits. When possible, list the debits first. Notice they started with cash. You could have put the credit on top and the debit on the second line, and you would not be wrong, but that would really foul anybody up who's trained to process financial information. That's not the convention. And as a courtesy, let's put the debits on top and indent the credits. Compound entry. Okay. Thankfully, we don't have to go through Mitch's transactions for the third time, but here are some of them in journal entry form. Here we go. Remember, he bought the supplies that we're going to call an asset. We debit supplies, credit cash. Purchase supplies for cash. That's a perfect explanation to record supplies purchase. Then look here, we have a debit to cash and a credit to accounts receivable. All right, received cash on item from, and they're even telling you who the two customers were. Normally, you don't go into that kind of detail on a journal entry. You can if you want. Remember, he bought delivery equipment, and the deal was that he was going to pay for part of it later. Well, here we go. He bought $1,000 worth of delivery equipment. That is a debit to that asset. We're crediting cash because he made a $300 down payment, and the balance of $700 is accounts payable to be paid later. We have prepaid insurance. Remember the insurance policy? He bought that asset. We debit, credit cash. He paid the wages. We debit wage expense, credit cash. Look at that explanation, paid employees. That's fine. And here they're just making a point to tell you to line up the debits, when you can. We're debiting cash and we're crediting accounts receivable. I'm sorry, debiting accounts receivable and crediting delivery fees because we made some deliveries for cash and on account. On account, nobody had money for that part of the transaction. And then finally, we debit drawing for $3,000 and credit cash when the owner took his wife on vacation. Those are your journal entries. You've just entered them into your system, and now you're looking them over like we just did, and we're happy with them. Now we hit that button called post, bammo. You hit post, it moves this data right into your general ledger permanently. If you realize you made a mistake afterwards, you can't eliminate anything. You can't erase anything. All you can do is prepare a reversal of what you did wrong and then a correcting entry, usually the best way to go, okay? So there is a look at journal entries for the first time. And you'll be seeing journal entries. For those of you who are going to take all the levels of accounting, you're going to be working with journal entries for the next 2 years, I guess. Okay, come on. Posting and preparing a trial balance. Posting and preparing a trial balance. What is the general ledger? A complete set of all accounts used by the business, and those accounts are called the chart of accounts. And the general ledger mimics the T accounts. I should say it the other way, I guess. T accounts mimic the general ledger. And this is where we're going to keep a complete record of the debits and credits as a result of entries made by journal entries. General ledger is laid out in the same exact order as the chart of accounts. So when you open up your chart of accounts or your general ledger, the first item you're going to see is the T account for cash, then accounts receivable, etc. T accounts were introduced previously. However, businesses are more likely to use a version of the account called the general journal account. That's our journal entries. They call them general journal, or general journal, journal entry, same thing. So here we go. Let's take a peek here. Well, here is our T account for cash. Here's the T account for cash. And you notice we have a plus 5,000 and another plus 2,100. Then we have various credits. We have some debits, which increase the cash. Cash has a normal debit balance, and that balance is $470. So that's a poor man's look at a general ledger, okay? It's meant to imitate the general ledger. Now let's take a look at a typical general ledger. Look at this. The very first page is account number 101, cash, like I told you. And looky here, we have the first entry that was made on behalf of Mitchell's deliveries, where he put $5,000 of his own money into starting his business. So we debit cash, and we have a balance now of $5,000. Then the second transaction, which you can see here, B, he spent $2,000 for motor scooters. If you remember that, that brings the balance down to $3,000. Then he spent another $600, bringing the balance down to $2,400. So your general ledger is really a pair of T accounts, one for the transaction, and and one to carry the balance, one to show the balance in the account. So you can see his balance started at 5, it went down, it went up, and by the end of the month, he had $470 in his bank account. Okay, I think we understand how to get the balance in the T accounts. I didn't really go over that too much. You add the debits, you add the credits, and the high man wins. Debit, in this case, debits are higher. That becomes the entry, the balance rather. Cash has a normal debit balance, which means that if you ever run into a credit balance here, you have some investigating to do. You either haven't entered all the information in, or you're missing something, or God forbid, somebody stole something. Most likely it's a mistake posting, something like that. We will not assume the worst. Come on. The process of copying debits and credits from the journal entry to the ledger is called posting. And you remember our grid for the journal entries. We entered the date, the debits, then the credits. The balance is going to get into the general ledger. And there might be a posting reference where it'll tie back to something. And you enter the ledger account number in the posting reference column if you wish. So let's take a look here. Here is our journal entry. Pretty easy, huh? Debit cash, credit Mitchell Williams Capital. They're both going up, right? One goes up with the debit, one goes up with the credit. And now we post this one entry and this one entry only. Look at our general ledger for cash. Cash is now showing an entry of $5,000, which is, of course, the balance after that first transaction. So chapter 4 here, we're dealing with journal entries. If you feel pretty comfortable with chapter 3, chapter 4 it should be just as comfortable, because we're just introducing how the numbers get into the T accounts or the general ledger. Okay. We're back to Mr. Trial Balance, and this is a very important document. It proves that your debits equal the credits. And they're saying it can be prepared daily, weekly, monthly, or whenever desired. I've never been with a company that ran the trial balance other than at month end. The trial balance is really just a piece of scrap paper. It's not a financial statement. It's nothing you're going to give out to the public. And there might not even be anything you keep beyond the final version of it. It's prepared after all transactions have been entered and posted. In other words, we've closed. Now we can run the trial balance. And we'll take another peek at the trial balance. And there it is. It starts with the chart of accounts going in the order of the 100s, 200s. Remember that? Cash, receivables, assets, then liabilities, then equity, then your revenues in the form of delivery fees here, followed by 3 expenses. Now, assuming this trial balance is complete and needs no adjusting, we can now prepare the financial statements. Please keep in mind, if you draw a horizontal line after the equity section, everything below that is your income statement. So you can just look at this and quickly say, let's see, we had 8,000 in sales, we had 26. Yeah, we made money. Sure we did. Now, I'm not going to go into explain how to find and correct errors. Some of the tips they give are pretty goofy, actually. Even though the trial balance indicates that the ledger is in balance, it can still be wrong. It's wrong. If you enter the debit as a credit instead, an item goes to the wrong account. And guess what? They're telling you to be very careful in preparing the journal entries and posting them to the ledger. Who knew, huh? Again, I'm not going over these tips for finding entries. I mean, some of his common sense: double check your addition, review balances, check and see if balances are too large and small relative to other accounts, some relationship there. Divide the different. The only one I'm going to show you, and I bet some of you already know this: transposition error. Transposition error. If you take a number, let's say that number is 45, and you accidentally enter it as 54, the difference is 9, right? If you enter 63 and put it in as 36 accidentally, the difference is 27. Any difference on a transposition error is divisible by 9. It's just a silly little math trick. It's kind of a good thing to understand. 81 minus 18 is 63, divisible by 9. Same thing if it was a 4-digit number or an 8-digit number. You transpose any two numbers, the difference is going to be divisible by 9. Now, you may be saying to yourself, why am I babbling about this? It can come in handy once in a while. It used to be very, very useful when we were doing this stuff in pencil. You carefully post everything to your spreadsheets, and you come up with the totals, and all of a sudden the debits equal 810, and someone accidentally put it in as 801. What we would do then is take that difference and divide it by 9. If it was divisible evenly by 9, that gave us a little bit of a shortcut where you go back to the top of your sheet and run your finger down there and kind of maybe pick out what was transposed. Okay, transposition errors, that trick of 9, can be useful even today with computer stuff. When you're entering a large journal entry and you get done and your system says it's not balanced, this could be very useful. Okay, and if the tips don't work, you must retrace your steps. Double check, huh? Who knew? On correcting errors, you never erase. Make the correction in a manner that is easy for others to observe and understand. Make a correcting entry. I would go further than that, or farther than that. When you make an error and you have to correct it, the only way to do it, as far as I'm concerned, is you reverse the wrong error. Reverse the wrong error and make sure your explanation says to reverse error on JE13, and then you put the right information in. Don't just don't put in a correction where you're incrementally making up the difference. That can lead to big problems, which I'll get into some other time. Okay. And here's exactly where I don't particularly like what they're telling us. Here's an example of correcting an entry. A $400 payment to rent expense was incorrectly debited to repair expense. You need to get the $400 out of repair expense into rent expense. So what they're telling you here is, well, let's debit rent expense and let's credit repair expense. Yeah, then we're okay. But when you get into slightly more complicated items, that method is not going to work at all. If you're adjusting accruals or something like that, okay? Believe it or not, that is the end of today's magnificent lecture. The end of the lecture. It's kind of a short one, but it's a crucial chapter, huh? Anybody have questions, comments? Bad jokes, anything? Nobody? What do you think, Vanessa? Pick on Vanessa.
It seems good. I don't know. I've gotten used to having those check options on the homework and the quizzes, which is kind of a problem. But the
What's that
test
again?
comes-
Say it again.
I keep using like the check option on the homework and the
Yeah.
quizzes,
Good.
which is great, but I'm a little worried about the tests.
Right. You're probably
Well,
not going to have that option on the test, right?
Yeah, probably not.
Okay. What do you think, Vanessa? Should we call it a meeting then?
Sure.
Okay. All right. Very
The
good.
same,
Thank
Bob,
you,
do
Katie.
they
Said
mark you down when you use that check? That check in the homework assignment area?
say that one more time, please, Leah. I'm having trouble hearing.
Will it mark you, or it's like deduct percentages or points if you use the homework check area?
No, no.
I
no,
also
no.
used it, but I ended up getting, I think, dinged like 25%, and it said because it was a late submission, but
It
I
might- it was-
definitely turned it in before the 11:55 21st due date, so I was
I
a
will
little
take-
confused.
do me a favor so I don't forget. Just email what you just said, and I'll
Okay.
check it right away.
All right, thank you so
do-
much for your
You
lecture.
do not lose points from using the check feature,
Okay,
only if it was late.
all right, perfect. I will send you an email. Thank you so much for your time and lecture. Truly
Thank
appreciate
you.
it.
Hey, take it easy, everybody. Have a good week. See
Thanks,
you
Bob.
Wednesday.
Take care. You got
Bye-bye.
it.